The stock market can be intimidating and unpredictable, but there are companies so innovative that they'd explode with growth. Today, we're diving into 5 ultra-growth stocks you do not want to miss. These companies have the potential to dominate their industries and transform the economy. The first stock on the list is NVIDIA, an innovative leader in the artificial intelligence revolution. NVIDIA isn't just a graphics card company. It's an infrastructure giant powering AI models like ChatGPT and Google Gemini. Every major AI model runs on NVIDIA's GPUs, making it a financial goldmine as demand for AI computing power skyrockets. While e-commerce might feel saturated, Shopify has evolved far beyond being a simple website builder into the infrastructure for digital entrepreneurship. Shopify is the silent partner behind millions of businesses, from small creators to big retailers seeking flexibility. With a focus on AI-driven tools, logistics automation, and frictionless payments, Shopify is deepening its role in online selling. ASML builds the machines that produce the world's most advanced chips, the EUV lithography systems relied on by companies like TSMC and Intel. ASML's advanced technology is irreplaceable, creating immense pricing power as global demand for chips rises. Enphase Energy is revolutionizing the way we generate and use solar power. Its microinverters optimize each solar panel's performance. Their technology makes residential solar systems more efficient, affordable, and scalable as governments push for cleaner energy. Enphase stands at the intersection of sustainability and innovation, reinforcing its long-term appeal with recurring revenue from various sources. Palantir Technologies is shaping the digital future, known for deep government contracts and its data analytics expertise. With AI-driven modeling and predictive analytics, Palantir's software is becoming essential across various industries like defense and healthcare. Now profitable, Palantir's strong balance sheet and growing demand mark its unique position between government and enterprise growth. When you put all 5 of these names together, NVIDIA, Shopify, ASML, Enphase, and Palantir, you start to see a pattern. They dominate crucial segments of the economy: AI, digital commerce, semiconductor production, renewable energy, and data analytics. These are the building blocks of the 21st century. The global economy is shifting. We're moving into an era where innovation is compounding at exponential speed. Companies that can adapt, scale, and leverage technology will thrive. NVIDIA and ASML are building the tools. Shopify and Palantir are enabling the infrastructure, and Enphase powers it sustainably. Think about how AI has reshaped everything from work to investing. NVIDIA created the AI wave, while ASML produced the technology making it possible. Shopify empowers entrepreneurship. Enphase enables energy independence. And Palantir teaches organizations to make data-driven decisions. The data Palantir analyzes might be processed on NVIDIA chips, produced with ASML's lithography machines, sold through Shopify platforms, and powered by Enphase Energy Systems. Investing in these companies isn't about short-term gains. It's about owning a piece of the infrastructure shaping the next century. Each of these 5 fits the description of businesses with durable competitive advantages. A smart investor doesn't chase momentum. They study fundamentals. NVIDIA's margins, Shopify's ecosystem, ASML's monopoly, Enphase's energy integration, and Palantir's software moat. These measurable strengths grow with time, research, and market adoption. Governments worldwide are investing in AI infrastructure and renewable energy. That benefits NVIDIA and Enphase directly. The rise of e-commerce, remote work, and creator-led brands ensures Shopify stays relevant. The global chip shortage has underscored ASML's critical role in the supply chain. Data security, analytics, and decision-making automation play straight into Palantir's core strengths. We're entering a phase of technological acceleration unlike anything we've seen since the early 2000s. Companies like Amazon, Apple, and Google looked like high-risk bets back then. Today, they define the global economy. The next generation of giants is emerging now when most people aren't paying attention. Imagine the potential 10 years from now. AI integrated in every product, clean energy a necessity, and more. Investing in them is about aligning with the direction the world is headed. Even beyond the financials, there's something inspiring about watching these companies push human potential forward. When ASML perfects its next-gen EUV machines, it's about pushing the boundaries of physics. When NVIDIA develops AI hardware that simulates human reasoning, it's creativity. When Palantir helps governments allocate resources, it's impact. Does that mean you should throw your entire portfolio into them? Absolutely not. Diversification still matters. Building a core allocation around innovation leaders can be a game changer for long-term wealth creation. The market will always have noise, corrections, and short-term fear. Long-term conviction beats short-term panic every time. If you're thinking long-term, 5, 10, even 20 years, these are the companies you'll wish you had bought earlier. Every major technological revolution began with a few visionaries and a lot of skepticism. We're in a similar phase now with AI, clean energy, and digital infrastructure. Those who can see the bigger picture will be the ones telling their success stories a decade from now. When we talk about ultra-growth stocks, we're referring to rare, game-changing businesses that redefine industries. These companies thrive at the intersection of massive secular tailwinds and unstoppable execution. Your ability to foresee market trends often distinguishes a good investment from a life-changing one. Investors often overlook the compounding of innovation. It's not just profits that compound. When companies like NVIDIA create a groundbreaking chip, it sets the stage for faster, cheaper, future innovations. The narrative is shifted. AI is now a utility, marking the next industrial revolution. Winners will be those who can scale AI performance and accessibility. Capital is flowing into companies like NVIDIA, AMD, and emerging cloud edge players. The beauty of growth investing is about identifying business models that scale efficiently, like those in the cloud ecosystem. From renting servers to providing intelligence, automation, and vertical integration, companies like AWS and Azure transformed recurring revenue into rocket fuel. Investors who caught the wave early understood usage drives revenue, and revenue drives more innovation. Ultra-growth investing can feel uncomfortable. Companies often appear expensive with high PE ratios. Finding the highest probability of sustainable growth is key. Execution matters more than valuation. Global macro trends, like the rise of digital infrastructure, shape ultra-growth opportunities for the next decade. The pandemic exposed how fragile global logistics really were. Now, governments are throwing billions at rebuilding domestic capacity. Companies leading in advanced materials, robotics, and precision automation will see exponential demand. The green transition is an economic inevitability. Adoption curves steepen as clean energy technology gets cheaper. Companies that provide enabling technologies, from rare earth processing to battery chemistry, will capture this wave of decarbonization. The fusion of software and hardware is redefining what a tech company even means. Think smart manufacturing platforms that use AI to self-optimize, or biotech firms that integrate machine learning to accelerate drug discovery. Biotech is quietly entering a golden era. The promise of genomic medicine, once stuck in the lab, is now transforming life as we know it. With breakthroughs like CRISPR, AI-driven modeling, and high-throughput sequencing, timelines are compressing from decades to years. Companies leading this revolution won't just treat disease. They'll redefine aging, healing, and living. Optionalities are key in growth investing. Ultra-growth stocks look risky. However, their pursuit of multiple verticals makes them powerful. Take Amazon as an example. Starting with books, it's expanded into retail, cloud, AI, and healthcare, amplifying its core business. Not every company in a hot trend is a future winner. The graveyard of next big things is filled with names that failed to execute. Hype versus high conviction growth hinges on fundamentals: leadership, scalability, and adaptability. Successful investors want CEOs thinking in decades, with cultures that embrace change. Adaptability is the ultimate competitive advantage. Now let's talk about one of the biggest shifts happening quietly: the democratization of innovation. Thanks to cloud platforms, open source software, and global capital flows, startups today can scale faster than ever before. Groundbreaking fintech in Latin America, AI startups in Southeast Asia, and green tech innovation in Europe. Retail investors have never had more access to tools once reserved for professionals, from real-time analytics to fractional shares. But with more access comes more noise. Clarity of thesis matters more than ever. Anchor your investments in megatrends with multi-decade visibility: AI, automation, energy transformation, digital health. The biggest winners tend to surprise even their biggest fans. The market's most profound transformations are usually non-linear. They break patterns rather than fit them. While e-commerce might feel saturated, Shopify has evolved far beyond being a simple website builder into the infrastructure for digital entrepreneurship. Shopify is the silent partner behind millions of businesses, from small creators to big retailers seeking flexibility. With a focus on AI-driven tools, logistics automation, and frictionless payments, Shopify is deepening its role in online selling. ASML builds the machines that produce the world's most advanced chips, the EUV lithography systems relied on by companies like TSMC and Intel. ASML's advanced technology is irreplaceable, creating immense pricing power as global demand for chips rises. And speaking of macro, let's acknowledge the elephant in the room: interest rates. Ultra growth was fueled by cheap capital. But growth investing isn't dead, it's evolving. The winners now will be those that can fund their expansion organically, with real cash flow and pricing power. That's why balance sheet strength matters. Growth is exciting, but profitable growth is unbeatable. The innovation economy is seeing convergence among industries. Automotive companies are becoming software developers. Energy companies are becoming data analytics firms. The frontier of innovation is moving beyond Earth, with space technology being commercialized at breakneck speed. Satellite communications, low-orbit internet, and space-based imaging are unlocking trillion-dollar markets. Data has become the new oil, but unlike oil, it's infinite. The challenge isn't extraction, it's organization and application. Companies that can turn raw data into actionable intelligence will dominate this century. Data-driven decision-making is key. The next generation of ultra-growth firms might not look like traditional companies. Decentralized networks and AI-driven DAOs could redefine business. Ultra-growth investing is about imagination backed by research, seeing possibilities before consensus sees profit. Ask yourself, which current technologies might be indispensable tomorrow? Where will the next ultra-growth wave begin? If you've been waiting for your next big opportunity, this might be it. Understand these companies and think long-term.